All right, well, good afternoon, everybody, and welcome to our end-of-day market review. Today, October 12th, 2011, with Jason Waugh. I'm one of the success coaches here in Trainers with Diligence Works, and I'll be walking you through today's presentation as well as all of the ones to follow. So with that said, I'm just going to go ahead and dive right into our agenda. There's a few things that we're going to be, first of which we'll be looking at the daily news. Our goal here is to see what was out there that influenced the day's trading. We know that right now with the markets the way they are, technicals alone isn't enough to dictate what's happening in a stock. It really is just overall market conditions. So with that said, we're also going to be taking a look at the S&P 500, where we'll be doing our market outlook. Now this is going to include analysis on support and resistance levels, as well as identifying the location of our daily MACD, which we use to be able to rate the markets on a scale of 1 through 6. We'll be looking at our volatility indicator, which we'll be using to dictate as to whether or not the markets are at a time where we should or should not be trading, just based on volatility sake alone. For that analysis, we'll be using the VIX.X. There are a few stocks on our current watch list. There's a few of them that we thought we can take a look at and identify for learning purposes. There really wasn't anything that floated our boat yesterday when we looked at our list, so there won't be any analysis on any previous picks. However, once we're done going through the current watch list, we are going to dive into preparing for tomorrow, which is going to be more or less a recap of everything that we've covered up to this point. This is going to include all of our news, our volatility indicators, the condition of the S&P 500, and the quality of our picks from our watch list, so that we can decide whether or not we're going to be actively trading tomorrow, sitting on the sidelines, or waiting to see what happens with the opening news. So with that said, let's go ahead and start with looking at the daily news. And basically the things that we need to ask ourselves are, where were the futures prior to open? The futures were positive, and they were pointing positive because of the continuing excitement and relief that they're seeing in Europe with the crisis going on over there. Whether or not it's a long-term fix or a short-term, right now isn't important. What we know is that people were optimistic for the day, and as a result, trading continued to be positive, pushing the S&P 500 and the Dow Jones up into some new resistance levels, which was obviously nice. And we can go ahead now and take a look at Yahoo Finance, actually, just for more confirmation. We've got one article here. It says Wall Street gains on Euro fund optimism, Dow up on the year. All right, so this is good to see here. Again, the Dow and the S&P were for the year, which means they are now at least at a break even and up, even if it's just a little bit. Certainly something which is nice to see, especially after the large decline that we've seen up until this point. So with that said, momentum day traders were certainly a large cause for today's growth, which doesn't necessarily mean that the long-term traders or investors are getting in. It doesn't mean that we're out of the park or out of the woods yet. It just means that today there's some optimism. People traded off that optimism, and we still need to see what goes on as trading continues. So that about sums up the news. What we can also do is take a look at the market sentiment. Again, this is going to include analysis on the S&P 500, where we're going to be looking for support and resistance levels throughout the day. And we'll be looking at the MACD to identify whether or not we're bullish or bearish, and if so, to what extent. So we've already got our S&P 500 chart loaded up here. Currently, we're just looking at a one-year chart, and we're getting rid of our EMAs and our Bollinger Bands so that our basic customers can view this chart, and even our advanced customers, without a whole bunch of extra clutter. So what you can see here is the S&P 500 had a great run today. A couple of days ago on Monday, we ended up breaking through a falling trend line, which was a significant level. That's great. Yesterday, Tuesday, was a very, very mediocre day. Very little change happened. It was just kind of a chance for it to regain itself, take a bit of a breather, and make its decision as to whether or not it's going to continue to rise or pull back and test support levels. Today, obviously, it did rise, and it actually penetrated and closed actually well above this upper trend line. However, by the time the day had ended, it had pulled back a fair amount. Now, yes, there's optimism, and yes, we had a good day all in all, but we can see that a lot of the profits that were made were given back. Now, what I'd like to actually do now is just quickly go to an hourly chart and get rid of our EMAs and Bollinger Bands. And I'm actually just going to even go to a two-day chart. So what we can see here is we had growth pretty consistently up until 12 o'clock. Since then, it went up, it peaked by 2 o'clock, and it started pulling back for the remaining few hours after that. So we can see that the optimism and the growth really happened in the first few hours. By midday, it reached its peak, and it went downhill since. So yes, a great trading day, but not a great trading day throughout the entire day. There was a lot more profit-taking and pullbacks near the end of the day, which could be an early signal that today's rally could be short-lived, and we can expect a pullback tomorrow, which really isn't that far-fetched anyways, knowing that we've had so many good days in a row. Let's go ahead and continue on with our analysis. All right, so next up, we'll be looking at our volatility indicator. And to do this, we'll be looking at the VIX.X. Oh, why isn't it loading? Here we go. And we're going to be looking to see if it's currently above or below 30. The analysis is pretty straightforward. So here we are. We're looking at the VIX.X, and we can see that it's currently at 31.26. So it's certainly working its way down lower and lower. This is all very exciting to see. And it looks like if we have a couple more days of good growth, we could actually see that indicator get below 30 for the first time since the beginning of August. That's just how volatile the markets have been. Since middle of August, it's been a whipsaw, a roller coaster ride. So seeing it get down below 30 is certainly going to be a encouraging thing to see. But we really just want to see that it's down and comfortably below 30 for at least a couple of days or even a week before we can say that, yes, the indicator has settled down and is down to comfortable trading spots. As it's above 30, though, we're going to continue to be cautious. We're going to be very aware of the fact that the news and the opening futures can shift markets trading on a dime. One bad article, and we can end up pushing this indicator back up into its 35 or even 40 mark and cause more declines in the S&P 500. So yes, the optimism is there, but there is still a lot of naysayers and concern based on this volatility indicator. All right, let's keep on chugging along. All right, taking a look at the current watch list. There are a few stocks that showed up on our watch list. Just going to go ahead and open up this watch list. A couple of new ones actually since I last looked. But a lot of the ones that we've looked at are either showing red candles or, more importantly, are showing that the MACD is still bearish. Now, this isn't necessarily a bad thing, but when we're looking at markets where the S&P 500 itself is rising bullish, we should be able to, and we will want to identify stocks that are also rising bullish. So there's a few things there that we can use as a baseline when looking for stocks to choose. Again, here's the S&P 500. We can see that it is rising bullish and has been bullish for a couple of days now. So a couple of stocks that we could look at. First off, PSSI. Here you can see one of the better looking stocks at the surface, but what we really want to draw our attention to is the fact that A, it's still bearish, and as a result, our previous cycle high needs to be the candle body. As a result, we can see that this stock is currently right up against resistance and does not show any room for growth. So it looks like it was a good stock at the first get-go, good support, good growth. I believe if we look down at our volume, yeah, we even see an increase in volume. It was tempting, but when you look at that cycle high, you can see now it's a no-go. Which leads us to another stock, MINI, and you can see that we've drawn two different cycle highs here. It's almost the same stock in that it's got good support, it's good rising, and the volume has been increasing. However, this time it's bullish. And what we like to do is we like to use the candle body, and you can see that that first line, it actually broke up above that resistance level. But because it's bullish, we can be using the wicks. And it's just as well this time because the cycle high wick is now proving to be resistance. And a lot of people will choose to be conservative traders and say, you know what, candle bodies is the way to go. Candle bodies is always more conservative, no ifs, ands, or buts. This is a great example of how the candle body is actually more aggressive, because we would have seen a breakthrough and we would have then gone and looked for our next cycle high, which could have been up here. But we know that just because it's bullish doesn't mean that it's going to keep on chugging along through these resistance levels. And as a result, we're using this wick as a secondary level of resistance, and just as well because it's now showing no room to grow. So there's a lot that could be learned from that. Otherwise, there were some other stocks that showed up on the list. Some of these new. Unfortunately, there's nothing for the TSX right now. So we're just going to go ahead and carry on with our analysis here. All right, so there was nothing that we looked at yesterday that jumped out to us. So we're going to ignore the previous watch list and get into preparing for tomorrow. All right, so a couple of questions that we need to ask ourselves. Are we in a market condition that does not advise trading? You know what? We've seen a lot of growth. However, we've seen some pullback near the end of the day. We are up against resistance, and we just need to ask ourselves, wow, how many days can we see consistent growth? I'm getting to the point where I'm starting to trade much more conservatively, much more casually, because I am expecting that pullback, even if it's just for a day or two. There are no statutory holidays tomorrow, so we've got green lights there. We should go ahead and take a look at any reports that might be affecting trading tomorrow morning. Otherwise, the volatility indicator is still above 30, which means we still need to keep very focused on the pre-market news and futures. If any of those look negative, even slightly, we're going to want to say no thanks, cancel any positions that we might want to get into, and sit on the sidelines. So we're at some interesting times right now, and we just really need to be careful with our money management and our positions that we choose to get into. So with that said, this has been the end of day market wrap-up. Let's keep our eyes out tomorrow, see what happens, but don't be alarmed if we see a pullback within the next day or two. Have yourself a good rest of your day, and we will chat again tomorrow. Talk to you guys later. Bye.